You're sitting at your desk right now, looking at that retirement account. The 401k with six figures. The index funds that always recover. The rental property generating passive income. Maybe some gold in a vault somewhere if you're smart. You feel secure. You feel like you've done everything right. You feel like when the economy crashes, you'll be protected while everyone else panics. But let me ask you something. What happens when the bank doesn't open? What happens when you log into your brokerage account and see a message saying withdrawals are temporarily suspended? When your tenant stops paying rent and the courts aren't functioning to evict them? When you drive to that vault and find a closed sign on the door? Here's what I can tell you with absolute certainty. 99% of investors have already made their choice. They've been programmed by every financial advisor, every investment blog, every retirement calculator. They're diversified, they're balanced, they're invested in exactly what everyone else is invested in. And when collapse hits, they'll watch every single safe investment disappear behind locked doors, frozen accounts, and worthless paper promises. See, the real secret about investments isn't hidden in some financial strategy or portfolio allocation. It's hiding in plain sight, written in the history of every economic collapse. When systems fail, paper wealth doesn't transfer to real wealth. It simply vanishes. I'm exposing 11 investments that everyone thinks are safe. And every single one of them is a lie. Number 1. Bank savings account. Let's start with the most basic investment on earth. Your bank savings account, the place where 90% of people keep their emergency fund. FDIC insured, always accessible, completely safe, except when it isn't. In 2008, people in Iceland woke up to find their banks closed. No withdrawals, no transfers, no access. Their money existed on a screen but not in their hands. In Cyprus 2013, the government simply took a percentage of everyone's savings to bail out the banks. In Greece 2015, ATM withdrawals were limited to 60 euros per day. This isn't ancient history. This is the modern banking system doing exactly what it's designed to do when stressed. Protect itself, not you. Your savings account isn't a vault, it's a loan you made to the bank. They took your money, lent it out 10 times over, and promised they'd give it back when you asked. But when everyone asks at once, that promise becomes impossible to keep. Bank holidays aren't conspiracy theories, they're standard emergency protocol. The government literally has procedures for closing every bank in the country simultaneously. Your FDIC insurance means nothing if the entire system freezes. That emergency fund you've been building for years? In a real collapse, it's just numbers on a screen you can't touch. Safe only until the moment you actually need it. Number 2. 401k and retirement funds you've been contributing for decades. Watching that number grow, dreaming about retirement. Your 401k is your future. It's untouchable. It's safe because it's designed for the long term. But here's what nobody tells you. That money isn't yours until you're 59 and a half. Try to access it early. 10% penalty plus income taxes. That $100,000 becomes $60,000 real fast. And that's in normal times. In collapse times, you might not access it at all. Your 401k is held by a custodian, a financial institution that manages it on your behalf. When markets crash and panic sets in, these institutions can freeze redemptions to prevent a run. Happened in 2008. Happened in 2020. Will happen again. And even if you can access it, what are you accessing? Stocks and bonds that have crashed 50, 60, 70%. Your 400,000 is now 100,000. Congratulations, you can withdraw your losses. The entire 401k system was designed for a world that keeps functioning normally. Steady growth, stable markets, working institutions. Remove any of those assumptions and the system breaks down. You spend 30 years feeding this account. In a collapse, you'll watch 30 years of contributions evaporate behind a screen you can't reach. That's not a retirement fund, that's a trap with tax benefits. Number 3, real estate and rental property. Real estate is the ultimate safe investment. Tangible, physical. They're not making more land. You can touch it, live in it, rent it out. Even if everything crashes, you still own the building, right? Let me introduce you to what happens when systems collapse. Your tenant loses their job, they stop paying rent. Normally you'd evict them, but courts aren't functioning, police aren't enforcing evictions. Your tenant knows this, they're staying. Now multiply this across all your properties. Zero income, full expenses, property taxes still due. Mortgage still due, insurance still due. You're bleeding money every month on an asset you can't sell because nobody's buying. In Argentina's collapse, property values dropped 70%. In Venezuela, people abandoned properties because they couldn't afford to maintain them. In the Soviet collapse, property ownership became meaningless when the government simply seized what it wanted. And here's the darkest part: empty properties attract squatters. Once they're in, they're nearly impossible to remove without functioning legal systems. Your investment property becomes someone else's home, and there's nothing you can do about it. Real estate requires a functioning society, courts that enforce contracts, police that remove trespassers, markets that have buyers. Remove these and you don't own property. You own a liability that costs money every single month. Number 4, gold in bank vault or ETF. You're smarter than the average investor. You know paper money is risky, so you bought gold, real money. 5,000 years of history, the ultimate safe haven. But where is your gold right now? If the answer is a bank vault, a storage facility, or a gold ETF, then you don't own gold. You own a promise that someone will give you gold when you ask for it. That's a very different thing. Gold ETFs like GLD don't give you gold. They give you shares that track gold prices. You can't redeem them for physical metal. When collapse hits and you need real gold, you'll have a brokerage statement and nothing else. Bank vault storage sounds safer. Your gold is sitting in a specific location. But when banks close, vaults close. When governments panic, they seize precious metals. Happened in America in 1933. Roosevelt made owning gold illegal and forced everyone to sell to the government at fixed prices. Third-party storage facilities make the same promises. Your gold is allocated, it has your name on it, but it's in their building, behind their locks, in their jurisdiction. When things get bad, possession becomes 10/10 of the law. If you can't hold your gold in your hands right now, you don't own gold. You own a claim that becomes worthless exactly when gold becomes priceless. Number 5, cryptocurrency. Crypto is the answer to everything. Decentralized, no government control, no banks needed, you are your own bank. The future of money until the power goes out. Your Bitcoin isn't stored on your computer. It's stored on a global network of computers that require electricity and internet to function. Your wallet is just a key to access that network. Network, no access. Your crypto wealth becomes as theoretical as a dream you once had. And let's talk about what happens before total collapse. Exchanges freeze, withdrawals constantly. Coinbase, Binance, FTX. When markets crash and everyone wants out, the exit doors close. Your crypto is stuck on a platform you can't access. Even if you have a hardware wallet, even if you've done everything right, you still need functioning infrastructure to convert crypto into anything useful. Try buying bread with Bitcoin when the internet is down. Try paying your property taxes with Ethereum when the computers don't work. Crypto was designed for a digital world, a world with reliable electricity, stable internet, and functioning technology. It's a brilliant system for normal times and completely useless in collapse times. You're betting your financial survival on infrastructure that's the first thing to fail. The moment you need crypto most is the exact moment it stops existing as usable money. Number 6, stocks and index funds. Stocks always recover. The market has never failed to come back. Dollar cost average. Stay the course. Think long term. Every financial advisor has told you this 1,000 times. But they forgot to mention one thing: markets can close. After 9/11, the New York Stock Exchange closed for 4 days. During the 2008 crisis, there were serious discussions about extended closures. Countries in crisis have shut down their markets for weeks, months, even years. When panic reaches a certain level, the solution is always the same: lock the doors, and when markets do reopen, they reopen lower, much lower. The Great Depression saw stocks drop 89%. 2008 saw 50% drops in months. Every crash destroys the people who needed their money right then. Index funds make this worse. Everyone owns the same stocks. When everyone sells at once, there are no buyers. Prices go into free fall with no floor. Your diversification means nothing when everything is falling together. You don't own companies. You own entries in a computer system that can be frozen, halted, or worthless at any moment. Your stocks require brokers to execute trades, exchanges to stay open, and markets to function. The moment any link in that chain breaks, your investment becomes inaccessible, and in collapse, every link breaks. Number 7. Government bonds. Government bonds are the safest investment on earth. Backed by the full faith and credit of the government. Treasury bills have never defaulted, risk-free returns. Let me tell you about full faith and credit. Russia 1998, government bonds defaulted. Investors got pennies on the dollar. Argentina 2001, default. Greece 2012, default. These aren't small, unstable countries. These were major economies that simply decided not to pay their debts. The United States has $34 trillion in debt. The interest payments alone are now larger than the defense budget. Every year, more money is borrowed just to pay interest on previous borrowing. This isn't sustainable. Everyone knows it isn't sustainable. When collapse comes, governments have two choices: default on bonds or print money until bonds become worthless through inflation. Either way, your safe investment loses most of its value. And even before default, there's the access problem. Your bonds are held by institutions. Those institutions can freeze. Those institutions can fail. Your government's promise to pay means nothing if you can't reach the entity holding your bonds. You lent money to the biggest debtor in human history and called it safe. You trusted an institution that has every incentive to inflate away its debts, and you expected full repayment. That's not investing. That's faith in a system designed to fail. Number 8. Life insurance cash value. Whole life insurance is the hidden wealth builder. You pay premiums, cash value grows tax-free. You can borrow against it. When you die, your family gets the payout. It's insurance and investment combined, but who holds that cash value? An insurance company, a financial institution that invests your premiums in bonds, stocks, and real estate. Sound familiar? They're taking your money and putting it into everything else on this list. Your life insurance is only as safe as their investments. Insurance companies fail. It happened in 2008. AIG, one of the largest insurers in the world, collapsed and required the biggest bailout in history. Without government intervention, millions of policies would have become worthless overnight. In a real collapse, there is no government bailout. Insurance companies face the same pressures as everyone else. Their investments crash, their real estate holdings become worthless. Policyholders all want their cash value at once. They'll freeze withdrawals, they'll deny claims. They'll do whatever it takes to survive, and your policy is just a number on their balance sheet. You've been paying premiums for decades, trusting a company to be there when you need them. But their survival matters more to them than your policy. When the system breaks, your cash value is their cash value, and they're keeping it. Number 9. Pension plans. You work 30 years for this pension. The company promised, the contract is signed. Every month, money will arrive until you die. Guaranteed retirement security. Now let me tell you about Detroit. In 2013, Detroit declared bankruptcy. Pensions were cut up to 30%. People who worked their entire careers for the city saw their retirement income slashed overnight. Legal contracts meant nothing in bankruptcy court. Private pensions are worse. Companies go bankrupt. They get bought and restructured. They freeze pension plans and switch to 401ks. The Pension Benefit Guaranty Corporation supposedly protects you, but their payouts are capped and their own funding is questionable. In a real collapse, your pension depends on your employer still existing, still having money, and still prioritizing retirees over survival. That's three assumptions that all fail simultaneously in crisis. Look at any major collapse in history. Pensions are always among the first casualties. They're promises made in good times that become impossible in bad times. The money was never set aside. It was always dependent on future growth that stopped growing. Your pension is someone else's promise to pay you from money they don't have yet. When the money stops flowing, the promise becomes worthless. 30 years of work traded for a document that means nothing when you actually need it. Number 10. Social Security. Social Security is the ultimate safety net. You paid into it your entire working life. The government guarantees it. 67 million Americans depend on it. It cannot fail except it's already failing. The Social Security Trust Fund is projected to run out by 2034. After that, the system can only pay about 80% of promised benefits. That's not conspiracy theory. That's the official government projection published every year. And that projection assumes everything continues normally. No major recession, no collapse, no emergency. Just gradual demographic decline. In a real crisis, those projections become fantasy. Social Security is a pay-as-you-go system. Current workers pay for current retirees. When unemployment spikes, payments into the system collapse. When inflation spikes, the buying power of your check collapses. Either way, you lose. During the Great Depression, Social Security didn't exist yet. During the next Great Depression, it might exist on paper, but deliver almost nothing in reality. You've been forced to pay into this system for decades. You have no choice but to trust that the government will keep its promise. But the government is 34 trillion in debt, printing money to survive, and making promises it mathematically cannot keep. Your Social Security check requires a functioning government with stable currency and working systems. Remove any of those and your monthly deposit becomes a memory. Number 11. Cash in safe deposit box. You're not naive. You know banks can freeze accounts, so you kept physical cash in a safe deposit box. Actual paper money you can touch, no digital accounts, no promises. Real money in a real box, smart move, one problem. The box is inside the bank. When banks close for a holiday, everything closes. The vault, the safe deposit room, your box with your cash. You'll stand outside a locked door, knowing your money is 20 feet away behind steel you can't penetrate. And it gets worse, safe deposit boxes aren't FDIC insured. If something happens to the contents, you have no protection. Banks have been known to drill boxes for unpaid fees, misplace contents, and deny access during disputes. Your property rights are surprisingly weak. In times of crisis, governments have historically seized safe deposit box contents. Gold confiscation orders included boxes. Tax authorities have frozen box access during investigations. The privacy you think you have is an illusion maintained only by stable times. You solved the digital problem and created a physical one. Your cash is real but unreachable, tangible but trapped. You can see the building where your money is, but you can't walk in and take it. The only safe cash is cash in your hand, in your home, under your control. Everything else is one locked door away from worthless. So let's count what you just learned. 11 investments. Every single one recommended by financial advisors. Every single one considered safe by millions of people. And every single one vanishes the moment you actually need it. Bank accounts freeze, retirement funds lock. Real estate becomes liability. Gold you can't hold isn't gold. Crypto needs electricity. Stocks need functioning markets. Bonds need governments that pay. Insurance needs companies that survive. Pensions need employers that exist. Social Security needs systems that work. Cash in banks needs banks that open. The pattern is obvious once you see it. Every safe investment requires a functioning system to remain safe. And collapse means systems stop functioning. Real safety isn't about which asset class you choose. It's about possession and control. What you can hold, what you can access, what no institution can freeze, close, or seize. The 99% will learn this lesson too late, watching their wealth disappear behind locked doors and frozen screens. But you now know the truth. If you can't hold it, you don't own it. If you don't control it, it's not safe. If it requires a system, it vanishes when the system does. Now rebuild your investments around that reality.